All right, welcome to The Explainer. Today, we're not just going to talk about abstract theories. Nope, we are actually going under the hood of a real, super detailed financial plan. We're talking about a machine that's been meticulously designed to build some serious wealth. So let's jump right in. 100 million rupees, 10 crores. Just look at that number for a second. Now, this isn't a lottery win. It's not some inheritance that fell out of the sky. This is a target. A specific, real-world financial goal that a real couple is actively chasing. And the big question is, how on earth are they doing it? So let me introduce you to Vishy and Shruti. They have set this incredibly ambitious goal, hit a 10 crore corpus by the year 2031. And what's so cool is that they've documented their entire strategy. So in this explainer, we're going to deconstruct their plan, piece by piece, to really understand the engine they've built to get them there. Okay, so before a single rupee even gets invested, their entire strategy is built on this rock-solid foundation. You can think of it like their personal financial constitution, a set of rules they just do not break. Let's see what they are. I mean, the sheer discipline here is just wow. A 70% savings rate? That's incredible. Systematically investing 3 lakh rupees every single month, like clockwork. And maybe, just maybe, the most important rule on this list? Avoid FOMO. That's the fear of missing out. This tells you their plan isn't about chasing the latest hot trend. It's about a relentless, almost boring, focus on their own game plan.
Okay, so with those rules as the bedrock, let's zoom out and look at the big picture. Where is their money actually working for them right now?
And here it is. This is their current net worth. So you can see they're not starting from scratch. They are well on their way. This 4.2 crore portfolio is what you get after years of sticking to those rules we just saw. So what's actually in this portfolio? This chart shows their diversification so perfectly. It is not all in one basket. You've got a solid base in retirement funds like their EPF and the National Pension System. You can see they also have a pretty significant and, let's be honest, higher risk chunk in startup ventures. But the single largest piece of the pie at 24% is direct equity, stocks they pick themselves. And that, my friends, is the engine room of this whole machine. So let's zoom in there. So how do they manage a direct stock portfolio that's worth over a crore without getting totally overwhelmed? Well, they use a system. And their system is a classic, but it's incredibly effective. It's called the core satellite strategy. This whole strategy is really about balance. The core is the steady, reliable heart of the portfolio. It's there for stability and consistent growth. Then, orbiting around it, you have the satellites. These are smaller, more tactical bets designed to capture much higher growth. But of course, they come with higher risk. I absolutely love this analogy. Just think of the core as this giant, stable mothership. It's full of big, blue-chip compounder companies. It moves slow and steady, and they only really check in on it every 3 months. The satellites, on the other hand, they're like these nimble little explorer ships. They get sent out on riskier missions to find what are called growth at a reasonable price stocks. And because they're riskier, they get reviewed way more often, every single month, just to make sure they're still on course. And here is what really makes their system so powerful. None of this is based on gut feelings. It's not based on hot tips from a friend. Every single stock that gets into their portfolio, whether it's for the mothership or an explorership, has to pass a strict, unemotional, data-driven checklist. And that's really the million-dollar question, isn't it? What's the real difference between a mothership stock and an explorer stock in their world? Well, it all comes down to the numbers. For the core portfolio, the mothership, they're basically hunting for these dominant, stable, giant companies. Take a look at return on capital employed. It sounds complicated, but it's just asking a simple question. For every 100 rupees a company invests in itself, how many rupees of profit does it spit out each year? Their rule says it has to be more than 15. That ensures the business is a highly efficient profit machine. This whole checklist isn't designed to find the next big thing, it's designed to find the current big things that will just keep on delivering year after year. Now, for the satellite portfolio, the checklist totally changes. Here, it's all about finding growth. But, and this is key, at a fair price.
Look at that PEG ratio. It's a really clever filter. It finds companies that are growing fast, but then it checks if the stock price has gotten way too expensive compared to that growth. Their rule of less than 1.5 helps them find that momentum without overpaying. It's a system built to completely avoid the hype and find real sustainable growth.
So when you strip it all the way, the real magic, the real power of Vishy and Shruti's plan isn't some secret stock tip. It's this: a disciplined, unemotional, rule-based system that they follow, day in and day out, relentlessly. The system is the strategy. You know, when you see a plan this detailed, it kind of forces you to look in the mirror. It's so clear how every single piece of their financial life connects back to that one big goal. And it makes you ask yourself, what are the rules that run my financial decisions? Or do I even have any rules at all?
And maybe that's the biggest takeaway from all of this. The perfect, super complex plan that you can't actually follow is completely useless. But a simple, good enough plan that you can actually stick with for a decade or more, well, that's what really builds wealth. So the question this whole explainer leaves us with is a pretty simple one. What are your rules?